The ASX 200 is on track for its best 2-week rally in 9 weeks, but with resistance overhead and expiration day up today, bulls might want to tread with caution. That said, I'm going to look through a couple of sectors which have caught my eye as they're showing potential signs of stability, and that includes the tech sector and energy. So the daily chart here shows that a double bottom formed around 8,500, and then we saw the rally really take off on Friday with a daily close above the 200-day exponential moving average. Whilst it's extended gain since then, momentum's already waning, and it's showing a bit of hesitancy there between the key level 9,000, not just because it's a key level. We've also got prior highs around there, and there's also a big options cluster, and these can act as magnets or support resistance levels at times. So I think as we get in towards next week, we might want to be on guard for potential pullback, but ultimately, given the strength of this rally, I think that a pullback could be accompanied with an eventual break higher. Whether it has the juice in the tank to get to an all-time high, I'm not quite convinced at this stage, but I do like how price has rallied up to 9,000 so far. If we zoom out on the tech sector, it's clearly within the downtrend overall, but there is a retracement against that downtrend. But zooming in, I like that we've got this bullish engulfing candle above the 50-day average, and there is some signs of support being built around 1800. Notice as well that we had this tight consolidation and then 2-day breakout ahead of this pullback. So above 1800, I'm looking for at least a movement higher, maybe towards 1950 on the sector, maybe back up towards 2000 or the 200-day average. And that means a few stocks have also caught my eye. Now, again, this is clearly in a downtrend, and overall, we could be looking at a bearish triangle breakout eventually. But we do again have this bullish engulfing candle. So as long as prices hold above that March low, I think there is chance of potential cheeky bounce higher. Now, that might not suit everybody's style because it's a counter trend move. Another way of looking at this is if somebody is bearish on this stock, they might want to wait for the bearish breakout first, or seek evidence of a swing low at higher prices, in which case keeping an eye on this stock for a bounce for support could then put it on the radar for a potential swing high and anticipate a break lower. As for Xero, what I like about it is it's holding above these range lows for now. Again, we have this bullish engulfing candle. We've had an established multi-day sell-off. So ultimately, a break above these highs here could signal maybe a move back towards 80. If we get a decent catalyst, maybe it could break above 80 back towards 90, all these range highs. Overall, let's not lose sight of the fact that it's a downtrend overall. And I think if we do get this movement higher, I would then be looking for a swing high, moving down, maybe even a bearish breakout again. And of course, if we do get a break lower immediately, the trend is presumed to resume. Technology one is in a nice uptrend on the daily chart. It's holding above the 2-day average. And again, we have this bullish outside day, bit of noise today. But as long as it holds above that 200-day average, around 20 or above 30 cents, but as long as it holds above that 200-day average, I think bulls could look for dips and then a potential move up to maybe 32 or 33. Now, switching over to the energy sector, we need to keep in mind that oil prices are, of course, moving lower due to the peace deal proposal in the Middle East between the US and Israel. That means we could see oil prices fall further, and if so, we're likely to see the ASX energy sector fall further as well. However, we have seen some stability on oil prices on Wednesday, and that's seen the sector holding above the 20-day average as well. So this is more about highlighting the potential for swing low, but I think it might be a little bit soon to assume one's already here. But as long as we do hold above these lows, there is a potential for a bounce. If we get a bounce on crude oil prices as well, then there's a few of these stocks who I've highlighted that could benefit. One of them is WDS or Woodside Energy, which correlates very well with the sector overall. Again, there is some potential here for some further downside, but maybe whilst it holds above 28 or the 20-day average, maybe we can get some movement higher. Ampol is interesting because you've got this bullish pin bar, which has respected that June 1st low. Again, because of the sell-off we've had there, it's really just looking for some mean reversion at best here. And that means if somebody is bearish on this stock, they might just want to wait for that bounce before reconsidering a bearish setup. And a similar thing is going on in Santos, which is sort of a bullish hammer above that 200 exponential moving average. Now, again, I actually prefer the price action on the tech sector. The energy one really does require oil prices to stabilize and bounce for any of these to stand any chance. It's just something to put on the radar to keep an eye on. As always, hope that's useful. Wish you best of luck with your trading.